Welcome to another amazing episode of Raising Private Money. I'm Jay Conner, your host, also known as the Private Money Authority. Well, today I'm so excited to have my guest join me. He actually has already raised over $115 million in private money, and he's going to share with us right here in this episode how he's going about doing it. Well, first of all, with over 20 years of real estate expertise, my guest actually began his journey all the way back to when he was 21 years old. That's when he acquired his very first single family rental. And while at the same time he was pursuing degrees in biomechanical engineering, can you believe, and finance at Virginia Tech. Now, since then, he's navigated many different kinds of real estate ventures, all the way from development and private lending to syndicating over, as of today, over $1.5 billion in commercial properties ever since 2016. Well, he lives in one of my very favorite places on the planet, and that's Asheville, North Carolina. In just a moment, you're going to meet my very special guest, Mr. Christopher Larsen, right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Well, hello, Chris, and welcome to Raising Private Money.
Jay, great to see you again. How are you today, my friend?
Great to see you as well. So excited to have you here on the show. I know your backstory, but my audience does not know your backstory. So first of all, how about share, how in the world do you go from an interest in biomechanical engineering and finance to real estate investing guru?
Yeah, Jay, thanks for asking that. And I love that question because so often, after spending 18 years in the medical device space, people are like, "Well, how did you transition, Chris? Like, when did you transition?" And when I was in school, and I'll share my story. And then if you're listening today, if you're watching today and you want to get a copy of my book, you can go to nextlevelincome.com, and there'll be a little book link there, and you can put your address in, and we'll even send you a hard copy here for free. And I'll tell you all about my story. But really, before I was studying biomechanical engineering, before I was interested in real estate, my number one love was racing bicycles, Jay. And I started racing when I was 14, and actually just wrote a little kind of story to honor my friend that I met. It would have been I think it was 1993. So we're talking about well over 30 years ago now at this point. Became my best friend. His name was Chris. We started training together every day. And I raced. I did okay my first year. Second year, I won the state championships and really fell in love with the sport. And I went on to race the Junior Olympics and raced at the multiple national championships, raced in college. I was actually All-American my sophomore year in college. But between my freshman and my sophomore years, that friend of mine, his name was also Chris. His name was Chris Strader. He had a massive brain hemorrhage and passed away on June 21st. And this show's just a few days after that date. And that's why I was writing about Chris because of that. And I went back to school, raced my bike. I was still studying engineering, but I'd already decided that I really didn't want to be an engineer. I wanted to be a professional cyclist. But after racing that following year and really using cycling as my therapy, I realized at a point kind of towards the end of that summer season that it was kind of silly racing my bike. I really didn't feel like I was getting everything out of life that I could get. So I came back to school. I quit. My team went pro. I gave up that dream, sold all my bikes, and I just kind of went back to life in college and was just kind of what most people would look at being a normal college student. But something had really changed in me, and that thing that had changed was that I was determined not to have any regrets, and I wanted to honor the life that I had and the life that my friend Chris did not have. And one of the realities in the world is that you need financial resources if you really want to live life on your own terms. So I had that kind of epiphany. I said, okay, like I want to live life the way I want to live it. I took an interest in investing. Actually, the same family friend that got me into cycling introduced me to the stock market. That was Roth IRAs were fairly new at that point. Learned everything I could about investing. And actually, I started as a day trader in the stock market, and I was making like $5,000 a month as a junior in college. But I'll tell you what, Jay, when you're laying in bed as a 20-year-old at 3 a.m. and you haven't slept all night, you learn real quick that that's not investing. And that was the next epiphany I had, was that, that's a job. And I said, okay, what can I do that's really going to give me true freedom? And I read over 250 books, got that MBA in finance, which I'm proof of over there on the wall. And I decided that real estate was going to be my path. So I decided at the age of 21 to be an investor first and foremost. But when you're 21 years old and you don't have a full-time job, you're still in school. Now I was completing my MBA. I was working for Virginia Tech to pay for that. I was working for State Farm in the nights and weekends, and I had a real estate license. So I was, doing 3 jobs plus going to school as well, getting my MBA, having a great time doing it. And I was just learning everything I could about money at that time. And when I ran out of money after buying my first couple properties, I said, well, what can I do to make enough capital to continue on? And I was introduced by the State Farm agent I worked for to a gentleman that was in the medical device space. And he actually sold hips, knees, shoulders, orthopedic implants, the same implants that I studied getting my biomechanical engineering degree. I thought, this is really cool. And he's telling me he gets to go into surgeries and this sort of thing. And I said, his name was Alan. I said, well, let me ask you, like, how much money, did you make last year? And he tells me, now this is, going back, 25 years. He said, well, I made $300,000 last year. And I said, how can I do that? Because I read Rich Dad, Poor Dad, and Robert Kiyosaki said, you need to be accredited. You need to make $200,000 or more to have access to the best investments that were out there. So that's why I pursued that path of biomechanical, orthopedic or medical device sales. And I did that while saving as much as I could over the ensuing 15 years and investing as much as I could. And, that's how I kind of built up our passive income for our family. So I ultimately didn't have to do that anymore. And when I decided to walk away, we had started syndicating deals in 2016. It was interesting because, you have a lot of conversations with clients, with customers when you're in, sales space, especially if you're going into surgeries. You spend a lot of time with these people. And I got a lot of questions from surgeons. They said, well, what do you do, Chris? Like, what do you invest in? And then as we started to have these conversations, they'd start to ask me, well, hey, can I invest with you? So my first partner and I did a JV partnership with the group that we were investing with in 2016. We bought a 100-unit apartment property, or multifamily property, which most people know as apartments, down in Atlanta, Georgia. And since then, we've done about 4,000 units in the multifamily space, self-storage. We have 20 mobile home parks. We also have 31 express tunnel car washes. Actually own a car wash right down the road here in Asheville, North Carolina. Hotel, got some office space, residential developments. You mentioned the private lending. So we've ventured into several different areas as we've kind of built out our portfolio over the past decade.
Well, that's wonderful, Chris. You've got such a variety of different types of real estate that you've been involved in. So you've just got a lot of experience that you can share. So as we started out the show, I let everyone know that you've already raised in excess of $115 million in private money. So you've got quite a bit of experience in raising private money. So let's dive into that a little bit, since the name of this show is Raising Private Money.
Absolutely.
What are your favorite ways to raise private money?
Yes. So I think, there's kind of some different steps that you can look at, Jay. And, I do some, I'm a coach with a group where we help others as they kind of go through this process. And, you have a fantastic show. You've been on our podcast as well. So you know it. So I think, if you're starting off and you're raising, a small amount of capital, you don't have to get fancy. You talk to these gurus or you join a coaching program and people tell you, oh, you gotta have a podcast. You gotta write a book. You gotta be on social media. You gotta do all these things. Well, I'll never forget when I first got into sales. I was selling Cutco knives back in my spare time, in summers during college, and I would sit in the back room of my parents' house, and I had a little smiley face drawn on a sticky note. And that smiley face would remind me to smile before I picked up the phone and called that next potential prospect to set up an appointment. And I did the same thing when I was with State Farm in college after that, doing my grad degree. And I kind of did the same thing when I was with Pfizer, and then, making sales calls with Medtronic and other companies that I work for. And the bottom line is you just need a list of potential people that are a good fit for what you're looking to do. So whether that's selling Cutco knives or a medical device implant, or whether it's finding a potential partner that can provide capital for a deal that you're working on. So, I think step one, Jay, is put a list of people that may have interest. You need their name, you need their phone number, and you need their email. And pick up the phone, make a phone call, have lunch with them, have coffee with them, sit down. I think, in today's world, we get too caught up in technology, and technology is amazing. You can use that to leverage things. But the first thing you need to do is really build your network, know your network, and have conversations with your network. And, an easy conversation would be, hey, Jay, you and I have known each other for a long time. We've talked over the years. I was telling you about one of the real estate deals I did. We're actually working on a project coming up. I want to see if you had any interest in that. Simple yes or no question, right? And at that point, it opens the door to have further conversations and do that. So I think that's my favorite thing still to this day, Jay, is just picking up the phone. I still do this, not like this, like young people do, right? Because we used to have the dial rotary phones when I was growing up, and have those conversations. And that kind of gets into my next point, but I'll pause there.
Sure. Well, hold that next point because I
Yeah.
got a question.
Yeah.
I tell people all the time that Carol Joy, my wife, and I, we've got 47 private lenders right now that are investing in our real estate deals. And interestingly enough, I never have ever asked them for money. I've never pitched a deal per se. And people say, well, Jay, how in the world do you go about doing that? And I said, well, it's real simple. I do what I put on my teacher hat, my private lender teacher hat,
Yeah.
and I began just leading with a servant's heart and leading with education.
Yes.
Interestingly enough, not one of our 47 private lenders ever heard of what private money or private lending was until I shared it with them and told them what it was and how it works. They never heard of self-directed IRAs. Over half of our private lenders are actually, using their retirement funds that they had, and they moved it over to a self-directed IRA company. So I, I advise real estate investors that have never raised capital before. From my experience, the very first thing to do and to get right is your mindset. I tell people
Absolutely.
it's hard to own real estate until you own the real estate that's between your ears. And
Love that. Yeah.
what I mean by that is first we got to get it straight. We're not begging, chasing, selling, persuading, trying to talk anybody into anything. We're simply, instead of asking for money, we're offering an opportunity. And, the traditional way to borrow money is you go to the local bank, get on your hands and knees and put your hands underneath your chin. You say, please fund my deal. And you got to fill out an application.
Yep.
And, Mr. and Miss Banker's got to look under your skirt at your personal assets to see if they're going to loan you any money based on your financial statement. And the way we raise private money, and you too as well, Chris, is we are actually offering an opportunity. There's no application process. I mean, you as the borrower, you're already approved. So that's the first thing people, in my experience, have got to get straight. What have you noticed since you've worked with some other folks to show them really how to go about raising capital? What are some of the mistakes that you've seen new capital raisers make and that people should avoid?
Yeah. So first off, Jay, I mentioned that smiley face, which is, like you said, you got to smile before you have a conversation with people. Your energy, really, life's an energy game. Your energy is going to determine, your success. And like you said, you're offering an opportunity. I'll never forget when I first learned about syndications, I was like, how have I never heard about this? Which really drove us towards our mission, which is to really help others, find opportunities for financial independence, but also educate them. Like you said, Jay, and that's where the podcast comes in, the book comes in. Shows like yours are so wonderful at doing that as well. And like I mentioned, when you talk to somebody, you don't say, "Hey, here's what I'm doing." You say, "Hey, is this something you're interested in?" People are like, "Well, yeah, like I've never heard about this before, right?" And why would they not be interested in it if it had some benefit? So after you have those initial conversations, or you say, "Hey, somebody is aware or interested in what you're doing," the first error is, it's kind of a corollary of when investors look at a deal, they look at the returns. The first error in sales that I find, when I went in to sit down with surgeons, they'd say, "Hey, Chris, what do you have to show me today?" And most sales reps would say, "Hey, this is what I have today for you, doctor. Look at this cool pen, right? Look at this cool product." That's the wrong way. The first thing you do is you say, "Hey, Jay, thanks for taking the time to talk to me. Just love to learn a little bit about your goals. What are you looking to do?" Right? If you sit down with a customer, a client, with that doctor, for instance, I'd say, "Hey, doctor, what are your goals for your practice? What are you doing today?" You learn about what they're doing. Then you learn about the issues they're facing. Potential investors are going to say, "Well, I'm looking for I'm looking for steady income. I don't like the stock market. I'm looking for less risk. I have a child with with some learning challenges, and I want to make sure I set them up with some assets, after something happens to me, or before something happens to me. I want to spend more time with my children, and I can't do that with my current plan, because I have to wait till I'm 59 and a half, or I can't, the stock market is too volatile. I don't have enough passive income." At that point, you're going to determine, whether what you're doing is going to be a good fit, and then you can share with them, potentially, what that is going to be, like you said, Jay. So again, flip that. Instead of saying, "Hey, this is what I have to offer," learn about your client, learn about what they're doing, and at that point, you're going to know if you're going to be able to actually, like you said, serve them.
Chris, that reminds me of advice I heard a long time ago, and that is, Jay, instead of trying to be interesting, be interested.
Interested. I love that saying. Yeah, love that.
Um, you were gonna make a point a moment ago. Did you make that point yet, or did I just
Um,
throw you back to it?
I don't know if I did, but I love that's a great way to underscore what I said in a very concise way, Jay.
Excellent. Well, let's change gears,
Yeah.
Chris. One of the areas that you really understand, you make it easy to understand, and people have heard this phrase, but they really don't understand it. So I want to give you the opportunity to explain in simple terms, because you're good at it. What is the infinite banking concept, and why should people learn about how to leverage that concept?
Um, I appreciate you bringing that up. I think it's fantastic. Again, it's, a lot of things I do are kind of contrary to conventional wisdom. And, just like we were talking about sales, don't start with the product, start with your customer. Um, I really like the infinite banking concept, which is really a specialized insurance contract. It's a traditional whole life insurance contract, which some people are like, "Oh no, whole life insurance, that's crazy." My father died when I was 5. I know what it's like to have, a need within our family and do that. So I think, having a protection, if you have a family, if you have a spouse, if you want to leave a legacy, I think traditional life insurance, there's nothing that's more predictable than that. I have my best friend, he employed this strategy, and 3 years after he did that, his wife passed away at the age of 40. Tragically, she was in the military. And people will say, "Well, it's not a good investment." And I would say life insurance shouldn't be viewed as an investment. It's a tool. And when you use it with what's called infinite banking, the infinite banking concept, or like on our website, if you click on the banking link, we talk about the investment optimizer. You can actually use it in conjunction with your investments. So how would that work? if you're looking for a place to store your money between deals, so let's say they're waiting for your next deal, Jay, and investors looking for that, and someone wants to invest $50,000 a year, they can actually store that $50,000 within their life insurance policy and get a rate of return. Typically, the rates of return right now they're around 6%. And when they get an opportunity to invest, they can then actually take the cash value out of that policy and invest it. And you get an arbitrage factor in there. So we teach and work with our investors and our clients to match up their insurance strategy with their investing strategy. And we started our policies. It's always easy for me to think. We did it a year before my son was born. My oldest son is 14. So 15 years ago, we started our two policies. And we did those to actually as an alternative to 529 plans for college planning, because we knew that we would have, and this is not something you hear in real estate, but we hear or investing, but you get a guaranteed rate of return. So we would have a guaranteed amount of money that would be available to our children when they went to our two boys when they went to college. And then we started using the cash value in those policies to be able to leverage that. Now, if this strategy is new to you, the way to think about term and permanent or whole life insurance is like renting or owning a home. When you rent a home, it's cheaper. It's typically about 30% cheaper to rent a home than own a home, but there's a lot of advantages to owning a home. You have control over that. You have predictability. You're not going to, probably not going to get kicked out because you have a landlord that decides they're going to sell it or raise rent or do this and that. But what's nice is when you own a home, you have a fixed mortgage payment typically, right, over say 15 or 30 years, and whole life insurance is very similar. So it starts out more expensive, but over time, as your rent goes up, as term life insurance policy rates go up, your whole life stays the same. But the thing that really allows this strategy to work, Jay, is the same thing when you own a home. Let's say you buy a $500,000 home and put $100,000 down. You have $400,000 of equity. Well, if that home goes up in value $100,000, you now have $200,000 in equity. And you can tap into that equity through a line of credit. You can do the exact same thing with a life insurance policy. So some of your listeners may actually be shaking their head up and down saying, oh yeah, I've actually used a line of credit to invest with Jay or invest in a project, or maybe even do your own project. And you can do the exact same thing with life insurance. And if you blend the strategies together with the infinite banking concept, you can actually increase the overall returns of your portfolio. And the way we structure these policies is so that these policies, these life insurance policies, actually pay for themselves within the strategy. And we actually have a book that you can pick up here. You can email me at chris@nextlevelincome.com. It's called Money Insights for Sales Professionals, but the strategies in here can be used by any high income earner to do exactly what I just said. And you can also learn more with our webinar at nextlevelicome.com/banking.
Again, Chris's website is www.nextlevelincome.com. And for goodness sakes, there's all kinds of resources there to help you become more financially free and get you on that pathway. One last topic I'd like to just touch on before we begin to wrap up, Chris, and that is you're not only in real estate, you are diversified. In fact, you mentioned at the beginning of the show that you own car washes. In fact, you own a car wash right down the road from where you are now. So why is it that you're investing in cash flow businesses like car washes in addition to real estate?
Yeah, great question. And, I think a lot of times people see what we do and they're like, oh, it's all real estate. And I really think that car washes should be viewed, like you perfectly described it, Jay, as a cash flow business. So as you build your financial base, let's say you have, your life insurance, you have your, your emergency fund, all your base plan, you have your cash flow investments with Jay, you maybe have started to build out your passive income and you've been doing it for a few years. I found that a lot of investors like to layer in some other options that are out there that may give one diversification, but also give potentially higher rates of return as well. I think when you're investing in businesses, you should certainly expect a higher rate of return. One of the things that we like about car washes is that you have a lot of the same aspects of real estate. You have income, you have the ability to add value, you have depreciation along with the ability to increase appreciation. But with our strategy, as we build up our portfolio, as we layer on more car washes, the value of the total portfolio goes up. So what I mean is the multiple with which we can sell the portfolio may go from, say, 10 to 15 as we go from 10 to 50 car washes. So as you build out that portfolio, it's a private equity model, it's a roll-up model. And as you do that, you're able to add more value to that. We have about 150 members on staff with our Hurricane Express Wash. You can check us out at hurricanewash.com. You can see all of our locations there. If you're interested in learning more about these as an investment, you can click on the invest link at our website and check that out. But it's been an area that I've been interested in for nearly 10 years now. My uncle and I almost bought a car wash about 10 years ago. And as the opportunities started to present themselves, we started to bring in investors and syndicate these projects as well, Jay.
Chris, you've brought so much value here to my audience and to the show. Final comments and final reminders that you'd like to give the audience as to how to connect and all those wonderful pieces of information they can get, the books you've just got a boatload of information that you can share. Remind everybody of all that as well again.
Yeah. So if you're on your journey towards building your passive income streams, please check us out at nextlevelincome.com. But also, if you are working to build your investor base and you're looking to raise private capital, you can kind of steal my model. Check out my book, nextlevelincome.com/book. You can get a copy of the book there, but then you can see our communications afterward and kind of see how we work with investors. And like you said, Jay, we take an education forward approach. So take a look at our book, take a look at our website, take a look at our podcast as well. Everything is available on the website there. And if you have any questions, and I've kind of spurned today, feel free to reach out to me directly at chris@nextlevelincome.com. Again, that's CHRIS at nextlevelincome.com.
Chris, thank you so much for your time, and thank you for joining me here on the show.
Jay, always great to see you. Thank you, sir.
Same here. There you have it, my friend, another amazing episode of Raising Private Money. I'm Jay Conner, the Private Money Authority. I'm so glad you decided to join us. And be sure, if you are watching on YouTube, be sure to subscribe and ring that bell so you don't miss out on any upcoming notifications of our shows. And if you happen to be listening on one of your favorite podcast platforms, iTunes, Spotify, or any of those, be sure and follow me so you don't miss out. I look forward to seeing you right here on the very next episode of Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide. And download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.